Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with the WXY scenario, where we're looking for a flattened W, complex structure in X, and a zigzag to the downside in a wave Y, where the most common target area for Y is between the 0.618 and the 1.236, taken from the high to the low of W to the high of wave X, which of course gives us quite a big area of interest, but that is why I have the target boxes as well. Currently, the blue box over here has been tested for the first time between 41k and 41.4k, giving us a nice reaction. If price would lose this box, however, I'm looking for the double bottom we have here, and then the yellow box, with the yellow box sitting between 38.6k and 39k. Now in this scenario, we are then looking for a zigzag to the downside. So if we open the zigzag folder I have, we are looking for this ABC over here, where we have a wave A finished, wave B possibly finished as well, and then a wave C to the downside, where the most common target for C is between 41k and 40.3k, taken from the high to the low of A to the current high we have over here. But as you can see, price has not hit this level over here, and it's very rare for a wave C to not even hit the common target area. It is more common for a wave C to move below the most common target area to the 1.618, sitting at 39.2k, which is also a target for a wave C, than not hitting this area over here. A minimum requirement for a wave C, however, is taking the low of A, which it of course has done. But if we look at the structure to the downside so far, then for a wave C, we are looking for a 5-wave structure, right? In an impulse or an ending diagonal, where in an ending diagonal, all of the waves have to be zigzag structures and not impulses. Now, if we look at this scenario here, we're then looking for a 1, 2, 3, 4, and a wave 5. But of course, we don't want to see overlap with your wave 1. Now, arguably, there already is overlap with the low of your wave 1 over here. This low. Now, not with the higher low, at least not yet, but the fact that price does have overlap with this low over here might increase the probabilities that this is a 3-wave structure, or the more bearish scenario where we have a 1, 2, 1, 2, and then we look for lower prices. If price moves to the upside a little bit more and also reaches this low over here, the probabilities increase even more that this is not a wave C to the downside, but it is either a 3-wave structure, or we are in a double 1, 2, 1, 2, and we look for much lower prices to come. Now, when we look at this structure to the downside as a 3-waver, what I am then talking about is a potential bigger flat in this wave B, where instead of wave B being finished after this move up, we are looking for this to be a wave A, 3-wave structure in B, where we have a nice ABC here reaching the common target area, and then we're looking for a wave C, 5-wave move to the upside, where this is your target area for your yellow wave B between 43.5k and 44k, which is in confluence with the white box that acted as resistance once before. But we do have a new fresh level there, which is the daily at 43.4k. Now, after that level, we are then looking for price to move towards the downside. After hitting that resistance, we then look for that wave C to the downside, where we then have wave A, 3-wave B, and then we are looking for a wave C to the downside. Especially important is also price, yes or no, hitting the 886. Will it hit it or will it not hit it? Because the 886 is still a common target for B, but a rare target for a wave 2 if we're thinking about a bigger 1, 2, and then a 3 towards the downside. But as you can see in all of the scenarios, we are still looking for this low to be taken eventually. If price can move above this white box over here, which acted as support before between 42.3k and 42.5k, that is when the probabilities can increase for price to move to the upside and range in this area over here for the weekend. If we go to the second scenario, then we are looking for a bigger zigzag towards the downside here. 5-wave A, 3-wave B, 5-wave C to the downside, where your common target area is between the 1 and the 1.236, taken from the high to the low of A to the high of wave B, giving us an area between 40k and 39k, which is in confluence with the yellow box over here, where the 1.618 is also still a target, sitting at 37.3k, which as you can see is surrounded by some blue target boxes as well for additional support. And this is a relatively easy scenario where we are then looking for a 1, 2 and then another 1, 2, 1, 2 continuation to the downside, and the probabilities for this scenario increase if price moves towards that white box. We then have basically neutral probabilities at that moment in time between the 1, 2, 1, 2 continuation down or a potential ABC, but arguably this scenario is not too nice because of the way the double 1, 2 is forming. Preferably in a double 1, 2 you have your first wave 1, first wave 2, and then your second 1 and 2 move below the first wave 1 over here. And at the moment that is not the case. If this is your second wave 1, it's not below the first wave 1, so it does lower the probabilities a little bit for this particular scenario. Now the invalidation of course is easy, that is this high over here for a double 1, 2, and if price does move above this level over here, first of all above the white resistance area here, and then move above the invalidation, we're going to remove this white count. We're going to move wave 2 where it is right now for then a potential bigger 1, 2 and then a wave 3 towards the downside, because at the moment probabilities are still higher to move to lower prices. However, for a wave 2, you don't want that 886 hit. Remember, the 886 rare for a wave 2, but common for a wave B. So if we then look at the probabilities of the different scenarios, then on the low time frame in this range, we are still looking for more downside to take this low eventually, and also on the micro, more locally here, we are looking for this low to be taken at a given moment to reach this blue target box for the second time. Now, if price can flip this white support box, probabilities will increase to move to the upside, where then we're going to be looking for a bigger three-wave structure in a flat to then finish your wave B or your wave 2 here. And then we're going to be looking for either a wave C or a 3 to the downside. And as long as price is ranging below over here, the probabilities are higher to move to the downside. We just don't have a lot of information just yet after this low has been made. So I like to give price some time as well and look at the next update to see what the probabilities are here more locally to move above this box or move to the downside to visit this blue box once again. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.